Well, actually, I think you should still look at investment banking because investment banking is still contributing the bulk of their revenues, and there is a certain weakness, which also might explain why the shares are still trading stubbornly low compared to its peers. And also, if you look just from the year to date figure, they started the year with some 16 euros and now are just a tad higher than 10 euros. So the reason behind that is clearly that investors were spooked by those comments that they cannot participate as much as other banks when it comes to generating revenues from more volatility in the markets. That was back in February, but also that they cannot cut costs as stringently as they promised to do so. But this might actually change now because Christian Sewing apparently is managing to cut costs quite thoroughly. That is what we can read from those figures, and also that they are very committed to do so in the next quarters is a good sign, because the cost-income ratio of the bank is standing at some 87%, and that is still way too high compared to its peers. Of course, someone also has to boost revenues in order to get that cost-income ratio down, and that is the big question mark, because the new strategy of the bank foresees clearly a focus in Europe, and that at a time where growth could actually be hampered by a looming trade war, but also at a time when everybody wants to do business in Germany, and the margins here for banking are traditionally very low. We have that not only with Deutsche, we have that with all other banks being very active here in the marketplace, that the lending margins are low and you don't generate a lot of money with the private and wealth business here on the ground as well. Talking about the private and wealth business, that is clearly also not a very positive spot of the bank. The revenues are also down by 1%, and clearly the asset and wealth management unit, also DWS, is doing not great. They just abandoned their targets for net money inflows for the coming years, because clearly the quarter was again a difficult one. DWS went public, had their IPO back in March, but Deutsche Bank still has a substantial share in them. And just today they were saying that they are, as I said, abandoning their targets for net money inflows, and that's a big blow to the business, clearly. So bottom line, to sum the whole thing up for Deutsche Bank, Christian Sewing is doing a good job to get costs down, but the big question mark is whether he's also going to do a good job to boost revenues going forward, because that will clearly be the big watershed moment for the bank and also for investors.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.